Are we live? I think we're live. It's been a while. Hope you're all doing good. Hope everyone's doing all right. We got CrowdStrike earnings today. I think this should be a decent earnings. Seems like everyone's focused on Nvidia, so I guess we'll see. GameStop, as you know, doing terrible. But it's a good time. Not much to talk about there. That's why I haven't streamed or made any videos, because there's nothing to really talk about. Jared! What's up, Jared? Hope you're doing well, my friend. Hope everything's good. Why is Abercrombie up 40%? What's that all about? They just had good earnings, I guess. Let's check that out. ANF. Abercrombie. They don't have their 10Q, but hopefully they have some, like the balance sheet or something on here, if it loads. Come on. My computer's been like super slow lately. It kind of sucks. Let's see. I don't really care about that. They not have a, there it is. Let's see, 185 million income. Crushed it. Is that for the year? I don't think that's for the year. I think that's Q2. Yeah. Let's see. Moose! It's been a while, Moose. It's been a while. Hope everything's good, Moose. Glad to see you, bro. I haven't seen it. It's been a while. It's been a while. KCR. What's up, KCR? Glad to see you in here today. Hope everyone's been doing good. Sorry I haven't been streaming or anything. There's nothing to talk about. We all know what's happening. It's not great, but we'll see. We'll see. Abercrombie Finch is doing all right. I don't know why it's up so much, but they must have announced something. Well, that's cool. Up 40% is quite a bit. Quite a bit. eBay's down. I thought there was something else I wanted to look at. I forget though. Is this brand new lows for Snapchat? Oh no, the lows of Snapchat are like $4, which was a month ago and 4 months ago. 10 billion market cap. If I remember right, no, I don't think Snapchat's undervalued. I think at $4 it was like getting closer to undervalued, because I think I had looked at it when it was $4. I just don't remember. That was quite some time ago. Let's see. Good lord, my computer is so slow, dude. Insane how slow it is. Oh yeah, 7.6. Oh yeah, it was getting really close to. I think it was like fairly valued at $4, or it was getting there. I don't think they make money though. Yeah, but they're losing less than they were. What is their? I assume they have earnings coming up again. When was this? August 4th. I was watching a video saying that's harder to hold dead money than a crash that pops back up shortly. I mean, it's just psychology. Realistically, that's all the stock market is. Nobody's gonna hold something that's not moving or going down when AI stocks are going up. Well, most of them haven't even moved the past couple months, but there's still a lot of things that went up like over 100 200% the past few months. So it's yeah, it's just simple psychology, financial psychology, I guess. At least that's how I view it. I don't think most people are willing to just hold something that's not moving or going up. I don't think most people just buy stocks and hold in general. I would say a majority of people are attempting to be traders and timing the market. Very rare you actually meet someone who's buying and holding stock, but it's yeah. You could be holding something completely trash. So there's that perspective as well. You might try to relate it to GameStop because we all think GameStop's good, but it hasn't been good, and in a different stock or asset or whatever investment, maybe what you're holding is complete garbage. So like that theory is not really relevant then, because your terrible investment is never going to work out if it's actually bad. So like in that case, you might be married to the idea of that your investment's really good, but it's not. And that could be GameStop. Who knows? Who knows? Giving the interview said that it's generally what it takes to be able to see the 10x or more. I disagree. I think what it takes to see a 10x is having the patience to wait long enough. I don't think it really, like, nobody's going to hold an investment for 5, 10, 20 years, realistically. Nobody, so if you don't get a 5, 10x in a few months, most people never see that. And you can also just trade options where getting a 10x is extremely simple, but it's just risky. So, like, I just don't think that's really a good perspective, honestly. I just don't. The people who made tens of thousands or hundreds of thousands of percent in the stock market just held investments for 30, 40 years, and some of them got lucky and the investments they were holding went up thousands of percents in like a few years. I think just time takes care of everything, but you could also be wrong, and in that case, you're never going to get a 10x if you're wrong. It's just not possible. But I don't know. I think the best way to look at it is you made a bet, and if you still believe in the bet, it's not over yet. Oh, that rhymed. That was really good. That rhymed. That was a really good rhyme. Some straight bars right there. Straight bars. But whether you're going to get a 5, 10, 20x, that's not something you can really predict. You can bet on it and hope it happens, but most people sell out before that ever happens anyway. Most people, even if they're right, they get up 2, 3, 4x and then they're done. So it's, there's a lot of you know, you can try to make it simple and make it black and white, but there's a lot of gray area in the stock market. There's a lot of different factors. You know, who knows how long this stock's going to be down? And is it going to go down more? And if the stock starts trading at like $15, $16 and then it goes up, backed up to like 20, 30, 40, if that's even possible, you know, who knows? Most people aren't going to hold. You know, most people have been down on the investment for so long. A lot of people are going to sell at break even. I would say a majority of people are going to sell at break even and maybe slight profit, a slight loss. But when you're sitting on quote unquote dead money and it finally revives, if it's not something you truly believe in, it's gone and you're never going to see the 10x if it's a possibility. And, you know, you can also be wrong. I think that's the biggest factor is you can also be wrong. A 10x isn't guaranteed just because you hold an investment. If the business is good and the stock price action is good, I mean, you would think so, but who knows? Who knows? Who really knows? Bass Mechanic. What's up, Bass Mechanic? We cannot predict the future. Basically what I'm saying, if we're right, then time will probably take care of the upside. Yeah, basically, but the short term, who knows what's going to happen in the short term? It could go to 16. It could go lower. I don't think it's going to, because once the debt equity exchange is done, you know, this is going to be the new 10 billion. $18 is the new 10 billion market cap rather than 21 or whatever. So there's also that aspect, you know, the price kind of doesn't matter. I think market cap matters more. Once you add those, you know, the 70 million plus shares you're going to add from this equity exchange, the mechanics of the stock are completely different. You know? Before the debt equity exchange, fair value was, you know, 20, 21, maybe 24. After this debt exchange is over, the fair value of this stock is like $18, $20. And it is what it is. So there's, you know, there's that aspect as well. Like, if they keep adding more shares to the market, the stock's going to keep going down because they're adding more supply to the market. And that's not something that you can really take into account, I don't think. Like, I didn't think that they were going to do this, but realistically, you know, the market's going to react negatively to that every time because you're adding more shares to the market when the supply or the demand hasn't changed. If the demand for GameStop shares suddenly goes up massively and they do one of those debt equity exchanges or another at the money or another bond or something like that, it doesn't really have as big of an effect, but the stock hasn't done shit for what, like 6 months? I don't even, how long has it been? It's been so long. Basically the whole year. I guess you had a few up times where you could have made some money, but pretty much for the past, you know, year or two, this stock hasn't done shit. And especially the past like 3 months, you literally haven't done nothing. And you've also traded the lowest volume ever. And then you add more supply to the market, like, the stock's gonna go down. And the only way it's probably gonna go back up is if GameStop continues to have good earnings and continues to grow, and then the market will maybe start to grow with the business again. But who knows? Like, you could see $16. I would never say that you couldn't see $16 because once this debt equity exchange is over, like, the VWAP's probably going to be $18 to $19, so what is it? I think it's 1.4 billion for the debt equity exchange. So divide that by 18.5. You're adding like 75 million shares to the market. So 44.448 million, 75 million shares. So you're at 523 million shares now. And then they'll probably be sitting, like, I've done this calculation before. I think if you minus the assets from the debt, or the debt from the assets, you're at like 8.2 billion or something. And I think I'm doing this backwards, but yeah, did that backwards. So 8.2 billion divided by 523 million. So book value is essentially, you know, $15.67, 69 cents, you know, probably, like, we'll just say $15.50. Like, that's your book value. That's what the shares are worth. So if they come out and have some like crazy earnings that, and their assets are up, which they probably won't be because of eBay, you know, the eBay investment is break even now. Maybe they're at like a slight profit. So I don't know. There's just a lot of things, but even if they come out and they have an extra like 300 million, what would that be like? You know, then book value's $16. I mean, what if they come out with like an extra, what if at the end of the year they're sitting at, I don't know, over 9 billion in assets minus the liabilities? Like, they're sitting on like, I don't know, like 12 a little less than 12 billion in assets, but you know, their liabilities are still whatever they are from the bonds. I don't know what it is exactly. We'll find out here in like a week or two. So these are all rough estimates, but what if theoretically we're sitting on like 9 billion by the end of the year, you know, after we minus the liabilities, and then you divide that by the new share count. Well, oh, I think I did that wrong. 9,523,000,000. Then you're sitting at 17.2 book value, and you're we're pretty damn close to book value being the price of the stock. Like, that's pretty insane. I don't know how often you see that on a profitable company. You don't really see that, I don't think. And that's going to be interesting. Once book value is, you know, the same price as the stock, like, that's pretty interesting. You know, who knows what's going to happen at that point, what it's going to look like, I don't know, but what's up, MS Unites? How's it going? Is Crowdstrike like not a popular thing? I thought Crowdstrike would be, I thought there'd be people interested in this, because everyone's looking at NVIDIA earnings. I don't think anyone's streaming about Crowdstrike right now, but pretty slow. Also, I haven't streamed in like a couple weeks, so there's also that aspect, I guess. Yeah, I'm the only person streaming Crowdstrike. Oh no, there's some other people streaming it now, but not many. And Crowdstrike's basically at all-time highs, so I feel like there should be some people here for this. We'll see. We'll see. So far, it's not simple to hold a stock that's up massive amounts after being down for quite a while. I hope I can do it. Looking for AR/guidance. Well, this is the place to be. We'll be on it once the earnings report comes out. We'll be on it. Lots of nice weather for camping music and getting sauced. Nice, man. It's been pretty hot here. It's been really hot. It should start getting nicer though. Conference call. There we are. Gotta get this ready. I mean, maybe. Who knows? Maybe nobody shows up for the CrowdStrike earnings. Who knows? Who knows? You never know these days. Oh yeah. Alright, we're in there. We're in there. I'm in Western New York. We get all 4 seasons, but for the most part, things are never all too extreme weather-wise. New York, huh? Interesting. I would think it would be relatively nice there in the summer, but super cold in the winter. Break Nation! What's up, Break Nation? Nah, I didn't get a call back. I'll probably call later or tomorrow for like a follow-up, but I assume I'm not gonna get that job, which, I mean, it's like $12 an hour to be an assistant manager, so in reality, like, I don't really care. But it would be fun to make content around. That's, that's really the main reason why I'm doing it, is to potentially make content around it, but I don't think it's gonna happen, unfortunately. So, I'm probably just gonna end up doing Amazon Flex again or something for a little while, because I'm kind of cooked right now. I was gonna get a HELOC loan and try to like sell some options, but I just don't even want to like get in debt or anything like that. I'm just trying to fucking just live my life, I don't really want to have to be like attached to the stock market to make income, even though I know I could do it. There's just a lot of like unknown risks. So probably just gonna start doing some fucking Amazon Flex for a little bit. See how that goes. Been watching quite a few videos about AI. Talk about sound insane. I'm the biggest AI hater, and I think it's gonna fail. I mean, it's not gonna fail. People use it, and it is useful, but I don't know if it's gonna be as like profitable and life changing as it is portrayed. But I also don't know. It's advancing so fast, but I hate AI, so I'm always gonna hate it. I think AI is so dumb. There's gonna be a few winners, There's gonna be like Microsoft, Tesla, Amazon, all the top are gonna win, but everyone else is gonna go bankrupt for the most part. There might be like a couple outliers from that group, but a majority of them are gonna go bankrupt, and all their infrastructure is gonna get bought out by the billionaires for pennies on the dollar, and I just don't. I'm not interested in that. I'm good. I like GameStop. What can I say? I like GameStop. It might be in the past 2-3 years have been complete trash, but I still think the long term is a lot more interesting than all these other things that seem to me extremely overvalued. But what the future of all those things are, as far as like their businesses and stuff, that's tough to say. I think the scenario I said earlier is probably the most likely, but in reality, who knows? I think the technology is still super early. Never been on much on stocks. I got half my brother's stock options in Mountain when he passed. My sister the other half. I think you told me about that before. I mean, what the fuck is that? I feel like you've mentioned that, or someone has mentioned that in here before. How do you have stock options in Mountain? It's only been on the market for a year. That's so that was recent? That's an odd stock to have options on. Very random. Very random. Basically thing the same. Not a fan of how transformative it's portrayed. Yeah, but it could, I mean, at the, on the other side, it could be more transformative. You really just never know. But I think it's going to take longer, and it's probably not as great as it's being portrayed. But who knows? Who knows, realistically? Yesterday in gaming. What's up, man? Been a while. A little over a year ago, I got 11,000 shares. Been up and down. IPO saw it shoot up to 30 a share, but I couldn't exercise the options for a year. What? Couldn't exercise the options for a year? Oh, he probably like worked there or something. That's super weird. That's very interesting. That's just such a... Did he like work there? Like, that's just such a random thing to have that many shares in, honestly. That's just so random. He's a lead Java programmer. Oh, okay, so that makes more sense. I'm like, that just seems so random. Steve! What's up, Steve Johnson? One more minute for the market close. What GameStop close at? 18 bucks? Nah, not quite. Close though. Such a weird price action the past few days. Isn't the earnings in like a week or two? Probably September 9th, I would imagine. That's what it's been every other quarter. Or around this time. So yeah, like 2 weeks. Oh, the 9th's on a Friday, so probably not. It's probably going to be on the 6th, I would imagine. Oh wait, that's not right. It's probably going to be on the 8th. What? What was I on? That was weird. Yeah, probably the 8th, I would imagine. Maybe the 9th. Mountain does advertising with streaming TV places like Netflix, Hulu. They call it performance TV, as businesses can target prospects at higher resolution using AI. Ah. That's pretty interesting. That's cool. We know if they'll do an earnings call. No, they're not going to do an earnings call. I don't think. I wouldn't think they would do an earnings call. Hate that I gotta roll already, but have a good one. Hey, I appreciate you stopping in, Break Nation. Hope you're doing good, bro. Like the stream, yeah. Make sure you guys hit the like button. Have a good one, Break Nation. Make sure you hit the like button. I don't think the numbers are out yet. I think Yahoo was just tripping. He said best company he ever worked for. They've distributed workforce all across the country. That's awesome, bro. I love that. Did I do the survey that GameStop put out about what items you'd want to see Power Pack sell? Nah, I never got a survey. How you did they email it out or something? I think I saw something about it, but I never got an email or anything. Where can I find it? I didn't see it on official channels. I just remember. Oh, yeah, I didn't see it anywhere official. I saw it on Reddit from I forget who, some YouTuber, I think. Yeah, I never got anything about that. Are the CrowdStrike numbers out? I'm not seeing it on their website. And it's not on the SEC website either. Two-thirds are due to impatient and the ups and downs. Company performance has been really good and they run zero debt now. It could have been overvalued when it came out though. That's like the biggest issue with IPOs like that, you know? I've never looked into that. But just judging by what I saw when I saw the chart, I mean, you got a lot of 13 Gs. So that's cool. 16 a share. Oh, it's 16 and then it went up to 30. It looked like it came out at like 30. I didn't really look that hard, if I'm just being honest. God, my computer is so trash, dude. It is so slow, man. Come on, bro. Yeah. That market cap was in the billions, wasn't it? Oh. Yeah, it's probably just overvalued, honestly. It seems like a good business, but it's not profitable for now. And it's potentially a little bit overvalued as far as the market cap. But yeah. That's a weird and that's a tough one. It looks like CrowdStrike came out, but I'm not seeing the numbers. It's up 5%. Does anyone have the numbers? Did I actually get a job at GameStop? No, they never called me back. I'm gonna call back for like a follow up, but I'd imagine no. I don't think it's gonna happen. Where's their numbers, bro? It's got to be on the SEC website, I guess. Dude, they only pay $12 an hour for an assistant manager. Like, that's insane. $12 an hour to be an assistant manager. Like, what? Excuse me? That's good for the shareholders. That's funny. Yo, that's funny. That's rather sad. Yeah, it kind of is. I don't know how much the GMs get paid. I didn't ask. So, maybe it's just like a barrier to entry thing. Maybe like the associates and the assistant doesn't get paid a lot, but when you become a general manager managing multiple stores, maybe then you can get paid quite a bit. Maybe it's something like that. Oh, here's the report, finally. Finally. There's like nobody here for this, though. I guess nobody cares about CrowdStrike. It's up 10%. It's probably the best performing fucking technology stock right now in this moment. But nobody cares, I guess. Oh well. Oh well. Alright. What's the employee discount look like? I think it's like 20% or something. So the employee discount is really good. Especially because, GameStop sells like really high ticket items. So like if you were like a big card investor or something like that, and you had 20% off at GameStop, like you could buy like a $10,000 card and get like with your pro membership like $2,500 off. Crazy. So the discount's pretty good. Salesforce as well. Salesforce is killing it. What is that ticker again? CRM? Oh wow, Salesforce crushing. Shoo! Crushing. I thought there would be more people for CrowdStrike though. Very surprised nobody's here for this. Alright. CrowdStrike reports second quarter fiscal year 2027 financial results. Delivers record net new ARR growth of 333 million. Increases fiscal year 27 net new ARR growth guidance by 630 basis points to 34% year-over-year growth. Oh yeah, that first thing accelerates growth to 51%. Exceeds 2.29 billion in ending ARR. Accelerates growth to 101% year-over-year. And generates Q2 record cash flow from operations of 530 million and Q2 record free cash flow of 377 million. CrowdStrike Holdings announced financial results second quarter fiscal year 2027 ended July 31st, 2026. Q2 was the best quarter in CrowdStrike history. Delivering record Falcon Flex results, record net new ARR, and accelerating growth. The Falcon is soaring. We're raising the Falcon is soaring. We're raising our full year fiscal 2027 net new ARR growth outlook by 630 basis points. The Mythos moment translated into mass market acceptance that AI adoption needs security, and that's CrowdStrike. Every enterprise will run on AI, and securing it is the largest market opportunity in our history. Yes, I mean, I kind of agree. I kind of agree. once GameStop starts selling everything, then you'll be getting a 20% raise. I don't think they're gonna hire me, bro. Which sucks. You know, I want to, like I said, I want to make content around it, but I can't. It is what it is, right? It just, I don't know. I kind of need money right now too, so it also sucks. So like, just getting cucked all around, basically. Can't even get a $12 an hour job, so my life is not great. Did the Crowd earnings release yet? Yeah, they're out. The stock's up about 10% almost. Commenting on company's financial results, CrowdStrike's CFO added Q2 was a record-breaking quarter. We achieved record net new ARR of $330 million, alongside record net new ARR from new logos, increased dollar-based growth, and net retention rates, and Q2 record cash flow from operations and free cash flow. Given our strong Q2 results and record Q3 pipeline, we are raising our full year fiscal 2027 net new ARR growth outlook to 34% at the midpoint, positioning us to be for continued durable, profitable growth. Congratulations, CrowdStrike. Congratulations. Go work for PSA. Oh, I wish. I wish. Hey, have a good one, KCR. Appreciate you stopping in, man. Hopefully everything's all good. Total revenue was $1.47 billion, a 26% increase compared to $1.17 billion in the second quarter of fiscal 26. Subscription revenue was $1.4 billion, a 27% increase compared to $1.1 billion in the second quarter of fiscal 2026. Annual recurring revenue grew 25% year over year to $5.84 billion as of July 31st, 2026, of which $332.8 million was net new ARR added in the quarter. Subscription gross margin. GAAP subscription gross margin was 78% compared to 77% in the second quarter of fiscal 2026. Non-GAAP subscription gross margin was 81% compared to 80% in the second quarter of fiscal 26. Income loss from operations. GAAP loss from operations was $33.2 million compared to $105.5 million in the second quarter of fiscal 26. Non-GAAP income from operations was $371.6 million compared to $255 million in the second quarter of fiscal 2026. Net income loss attributable to CrowdStrike. GAAP net income attributable to CrowdStrike was $5.3 million compared to a loss of $70.2 million in the second quarter of fiscal 2026. GAAP net income per share attributed to CrowdStrike common stockholders diluted was 0.01 compared to a loss of 0.07 in the second quarter of fiscal 26. Non-GAAP net income attributable to CrowdStrike was $322.9 million compared to $237.4 million in the second quarter of fiscal 26. Non-GAAP net income per share attributable to CrowdStrike common stockholders diluted was 0.31 compared to 0.23 in the second quarter of fiscal 26. Cash flow. Net cash generated from operations was $530 million compared to $332.8 million in the second quarter of fiscal 26. Free cash flow was $377.4 million compared to $283.6 million in the second quarter of fiscal 2026. Cash and cash equivalents grew by $5 billion. Yippee. Keep an eye on them because they are making sweeping changes. Yeah, I'll keep an eye out. There's also like other grading companies as well. But for the most part, you'd have to like travel to the job most likely. I don't think they have that type of stuff where I live. Get a job there so I can send you heaps of games and get a 98% discount. Could also work for any of these digital collectible websites, and most of their positions are probably remote. Something that's still in the same sphere, and the knowledge would still translate to your channel. Yeah, I'll keep on the lookout, but pretty much every interview and job I've tried to get, it just doesn't work out, so I'll definitely keep on the lookout, but I just haven't had any good luck in the job search. I mean, that's why I was doing YouTube for the past 2 years. It's just like impossible for me to get a job for some reason, so but YouTube is kind of going downhill, unfortunately. And for me, YouTube is fine and everything's great with YouTube. Like, I think being a creator on YouTube is a huge opportunity, but it's just what I talk about and the community that follows me. It's not really the best, at least right now. It's very slow, and yeah, it's just a tough community to be a part of and make content for, especially if you're trying to make like a living out of it. I mean, even this stream, like, this stream's not even about like GameStop or anything, and there's nobody really here. It's about a stock earnings, one of the top stocks in the market that's at all-time highs and has doubled the past 4 months, and nobody cares about it. So it's just a tough field to be in. I've been on the fence about getting games graded. I've a handful of decent copies of Red Alert 2, heaps of all others sealed. I just don't. Personally, I don't really like grading. Like, unless you have like a perfect copy of something that is going to get a 10, I don't think grading it's worth your time, honestly. I really don't. Because if it comes back as like an 8 or a 9, that grade is the same price as if you never even submitted it. So, like, if you like truly think you're gonna get a 10 on something, then yeah, for sure, grading is like pretty cool. But other than that, like, I'm not a big fan of grading. I think it's kind of a waste of money to just like slab up your product if it's not a 10. Have you looked at executive assistant type jobs, those hired digitally? Nah, I haven't seen anything like that. Pretty much I just have looked on like the basic like job boards like Indeed and like ZipRecruiter and stuff like that, and try to find stuff off there, but there's just there's really like not a lot where I live, and it's just super competitive. Like, I can't even get a job, a $12 an hour job. Like, fuck, dude, what am I gonna do? Like, if I can't even get a $12 an hour job, like, how am I gonna expect to get anything else? Like, that's crazy. That's like actually insane. I'm gonna have to go work at like KFC or some shit. On God. I'm gonna have to start flipping chicken. Slanging chicken. It's crazy. The job market's insane where I live. If you have any suggestions for like where I could look, I'll take them, but I think it's just different where I live. I think it's just super competitive. Job boards are broken. You got to try to make personal connections, cold messaging, or going into businesses physically and ask. Good point. I agree. I think job boards can be good, like, to see what businesses are hiring, and then yeah, I think you're right. I think personal connections are super key. Super key. I don't have a LinkedIn though. Whoops. Human contact's critical. These online applications are garbage. Don't waste a second on them until you have in at that company. Do not waste time on that shit. It's demoralizing and a waste. I agree. I mean the GameStop interview was in person. I actually did 2 interviews. I did one on the phone and in person. But I do agree. I do think a lot of like applying for jobs and shit is a complete waste of time. But I've also just had, a bad experience doing it, so get a part-time job if you need money, dedicate time to being the best trader the world has ever seen. I can already trade on the stock market, like doing that's super easy. But that's not where my money's going right now. My money's going into investing in GameStop, and I'm not going to trade on top of that. So, if the GameStop investment doesn't work out, then I'll get back to trading. Trading's easy, and I'm good at trading. But that's just not what I'm doing in my life right now. Did I not get the job at GameStop? Nah, I haven't got a call back yet. I've got jobs before just by walking in and being like, yeah, y'all hiring? I can see it. That's awesome. That's funny. My niece is a skilled machinist and she submitted applications via the websites and can't get past the AIs, yet machinist jobs are all over the place. Yeah, that's insane, dude. That's actually crazy. That's way insane. Or they'll say, yeah, but you gotta apply online. Okay, then you do that. But then know who you are. So you keep going in every 2 days to see what's the status of the job. Some good, some quality job applying advice right here. I appreciate it yesterday in gaming. Some quality advice here. Hound their ass and show consistency and follow up. Yeah, I need to follow up on GameStop, but I'm also like, ugh, $12 an hour. Ugh. It's disgusting. But you're right. The squeaky wheel gets the grease, as they say. Then there's my nephew. He's a professor of history and theology and is currently doing car warranty paperwork at a dealership. Huh. That's so odd. The job market's weird, bro. You gotta have the mindset of I won't take no for an answer, so that means you'll be bugging them to see what's up because that's also shows interest. Yeah, I agree. I think the thing for me is like none of these jobs in my opinion are really like worth pursuing like that. If it was like a good like career that I could actually get into, maybe I'd be more like inclined and interested to do something like that, but like Most of these jobs are so trash. That's the like, but I can't really be like too picky when I'm in need of it. But at the same time, I can literally open my phone and like I can't do DoorDash anymore, I don't think, but like if I had like a DoorDash app or like Uber Eats, I could open it, make money literally right there. So that also, like, the way I view making money is kind of messed up. But I also don't want to, get a job and waste my time when it's not going to benefit my future. I've had so many jobs that were honestly just a waste of time. They weren't like careers. That's part of the problem. You're settling for jobs, and then that shows in your pursuit of the job, which they also probably recognize. You don't want to start a dead end. Yeah. I'm too, like, old to start, like, a dead end job, I'm too old. If I was still in, like, my 20s or something, it's like, yeah, whatever. But it's like, I can't just go work some stupid job for, like, a couple months or a couple years and then get fired or quit and then have to go start from square one again. Like, it's just like, fuck, dude. I just can't do that. I just can't. I've already wasted way too much time. Really don't care if you say yes or no, but whatever, I'm bored when I go, they're gonna sense that energy and be like, no, I'm good. Hey, that's a good pickup line. I don't know what you're talking about. It's a good pickup line right there, bro. Hey, you want to go out? I don't really care, but like, it's a solid pickup line. I get what you're saying, though. I get what you're saying. Damn, CrowdStrike ripping. GameStop probably works out in the next few months, and then I'm quitting my job. I mean, I don't have an opinion. I agree, but I don't want to agree because I've thought GameStop was going to work out for a while now, and it hasn't. So I agree, but I don't. And also, even if GameStop does work out, I don't know if you should be like quitting your job, honestly. Or, if you do quit your job, you got to like try to pursue something you actually want to do. I don't think just like quitting and retiring is a good idea. Trades is the place to be. Trades are good too. Trades are really good. It's probably what I'll end up having to do. Anyone see the news about the converts? What? I don't know what you're talking about, Rickson. Unless you're talking about the debt conversion that happened like a month ago. That was a while ago. Oh, I'm quitting my job for sure. Fair enough. Fair enough. Fair enough. See if there's carpenters union local. They often take on apprentices. I don't think I've ever seen anything like that, but we'll check it out. I think like plumbing's kind of interesting. It's kind of a gross job, but it's pretty interesting. There's so many things, man. There's just so many things you can do. It's crazy. It's hard to commit. Should have should have known what I was doing with my life like 10 years ago. But I was also making a lot of money 10 years ago, so it's I never expected me to be here where I'm at now, because money's never been an issue for me, if I'm just being honest. I've always had like a business idea or some way to make money. It's really only the past like 2 years it's been, especially this past like 6 months, it's been somewhat of a struggle. It's hard to put into text. I love plumbing, but yeah, it pays through the pipe. A turd herder. I mean, I did some trade work on my own house this year. A lot of you guys, I think, were here for that. I've been crushing. I did a massive job this year. It's just, it didn't pay me anything. It just made my house maybe more valuable. Maybe. Debatably. I've been a carpenter 30 years. I would suggest it, but it pays good. Wouldn't suggest it, but it pays good. 30 years, wow. That's impressive, man. I have so much respect for people who have been in their like line of work for over a decade and multiple decades. Like that's just very respectable. I think that's just crazy to have that kind of commitment to something, but at the same time, it's probably served you well over the years, and that's why you've done it. So I get it. How many people go into the trades as a second career with little to no knowledge? Seems like it'd be hard to do that later in life, at least with these office jobs. You can bullshit it. Yeah, that's another aspect as well. But you can still, your body has a lot of longevity. You could do like pretty tough, hard work, at least until you're like pushing 60, I would imagine. And maybe even past that if your health is good. Trades are hurting for people. Converts had to be activated due to fundamental change. But also what the other 2.8 billion. What? Also that the other 2.8 billion will be paid back in cash at VWAP end. I don't know about that. Well, we'll see what happens. I'm not tinfoil and on the debt exchange. It raised their book value. That's the only reason why I think they did it. Any like tinfoil or speculation, I'm not gonna get behind it. There's other GameStop YouTube channels for that nonsense. That's not this place. No more tinfoil. No more speculation. No more of that nonsense. If there's not facts, I don't want it. I don't want to talk about it. It's bad enough that I'm invested in it. My niece went into machining with 0 skills. Now 4 years later, she's making 34 an hour, full bennies, 401, etc. Damn, that's solid. That's super solid. My cousin works at a steel factory and I think is technically like a machinist. Hasn't been there for very long and has already got like multiple promotions and stuff, so I do always have like an option if I ever truly need it. That's super good though. That's solid. It's in the terms of the convertible bond on the SEC filing. Yeah, there's a lot of stuff in the proxy statement. There's a lot of things. How do you know they didn't just do the debt exchange because it raises book value and it was valuable to shareholders? How do you know it's not just that reason? I don't know. I don't want to, like I said, I don't want to get behind any tinfoil or speculation. Until the facts are presented, I'm not going to speculate on it. It's a waste of my time. Time waits for no man, woman, another story. I agree. I was really betting on the YouTube to work out, but it kind of went the complete opposite way. Unfortunately. It's not an easy thing to pursue at all. I mean, if you really think about it, though, I am probably like a top 1% streamer. If I'm not a top 1% streamer, I'm definitely like a top like 2 or 3% streamer. So like I have had a lot of success, doing YouTube and shit, but it's just super unattainable to make it like a career. Content creation is all about the views. Gaming is very saturated. Men dancing in women's lingerie to the oldies. That market is wide open. Holy shit. Brother, chill. What the fuck, dude? That's funny. That's funny. I mean, you're not wrong. That's the fucked up part, is you're not wrong. If I wanted to do some like truly like degrading stuff, I could. I definitely could. And it'd probably do well. It would probably do pretty well. YouTube's so difficult, and the bad part with this channel is viewership will fluctuate based on stock price. Yeah, I know. It sucks. It kinda sucks. It's not 10 though. Do you know that there's a fundamental change of the business? Because you said in your sentence what that fundamental change is, we don't know yet. So yes, what you are saying is tinfoil and speculation, because you don't know what you're talking about. You're just assuming something. And again, I'm not talking about that because I don't care. So if you want to go and talk about tinfoil and things that have no like weight or fact behind it or anything, like, I know what you're talking about. I've read the proxy statement, but it's irrelevant until we get a real announcement. So I don't know. You can think it's not tinfoil, but it is, and I don't want to talk about it because I just don't care. Kalaluka! What's up, Kalaluka? Good to see you, my friend. Glad you stopped in today. Did I get the job at GameStop? No. I don't think so. If things turn around and there's more happening, you'll be in a good spot. For example, allowing live selling and things like that, you'll be in that boat and ready to go. It all works out. Oh yeah, I agree. I'm a firm believer that I'm not like religious or anything like that. Like I don't follow a religion, but I think God's relatively real. I think. I hope. I hope. But I think God gives you everything you need. You know, he doesn't give you everything you want. I actually think you get everything you want. I actually believe you get everything you want. It's just it doesn't look like what you thought it was going to look like every time. And it's also not on the same time frame as you think it's going to be. But I think you get everything you want for the most part. And I think you get everything that you need. And I think I have everything I need. I just I want more. that's really all it comes down to, I guess. I agree though. And I mean, we'll see, man. We'll see. I mean, I was hoping to get that job at GameStop just to, get my foot in the door and be able to take advantage of that opportunity if it ever presents itself, but I guess it's not my time, man. I guess it's not my time. I call it fundamentals. You could try becoming an eBay seller. I've thought about trying it myself now that we own 10%. I used to sell on eBay. I've sold a lot of stuff on eBay. I just I stopped being able to like find stuff to flip. Honestly, that's why I stopped selling on eBay. And the fees got really expensive and the shipping got really expensive, so not only was it hard to find things to flip, even when I did find something to flip, didn't really make as much as I used to. So I used to sell on eBay, but there's also a caveat to selling on eBay. You have to buy product to sell on eBay, and all my money's going to the stock market right now, so it's like I could, and I probably should have, had money in or towards like buying eBay products and stuff to sell on eBay, but all my money's going to the stock market, so I haven't, I don't really have that opportunity right now. And is all my money going to the stock market a good idea? So far it hasn't been, but maybe in the future I'll be happy that I did it, but that's the bet. That is the bet. Would I have been more happy this whole time buying stuff to sell on eBay or whatever, buying random stocks and trading? Or will I be happy that I YOLO'd all my money into GameStop? Who knows? Who knows? We'll see. We'll see. Sorry you didn't get the job. Hopefully something comes your way. I appreciate it, man. Thank you. It's all good though. They don't really pay that much anyway. So, it's a blessing in some ways. But honestly, I wasn't really like trying to get a job at GameStop for the money. I kind of just wanted the experience and to make content around it. So, I don't know. We'll see. Like I said, I'll give them a call later today or maybe tomorrow and follow up on the interview, but the lady said she was going to call me on Monday and I haven't heard from them, so I just kind of assume that it's not going to happen. Why isn't this starting? This conference call should be starting, right? It's almost 3. I've sold a couple things, but never done it as a job. Could be fun to go to a couple flea markets. I've sold a lot of stuff. I also used to work at an eBay warehouse. I used to list like a lot of stuff, like hundreds of items a month. I've listed a lot of stuff on eBay, and personally have sold a lot of stuff on eBay. But it's a tough thing to make like a sustainable career out of if you don't have like at least $100,000 to constantly be buying and selling products. Like it's a tough thing to make a career out of, and it's only gotten tougher throughout the years, I would say, as more and more competition and higher fees, higher shipping. I never recommend it full time these days, but it's a decent side hustle. I do 3G, 4G a month. Yeah, if you can get it, like if you can find the right products and all that, eBay is solid. But that's like, the biggest barrier is being able to find the right products that you can consistently sell over and over again. Or if you're not finding the same products to sell consistently over and over again, finding things that are a good enough margin to make it worth your time to do all that research. I've just never had any like luck doing that. I found stuff, I've had luck for sure. Like I went to like a garage sale one time and picked up a bunch of like retro gaming stuff and a bunch of stuff like collectible uh like collection boxes of DVDs, and I got a bunch of stuff for like a couple $100, like maybe like $1,000 worth of stuff for a couple $100, but you just don't find stuff like that all the time. It's just super rare, at least in my experience. Everyone's experience may vary, Sourcing's tough now that everybody has AI. You get lucky if you find some buffoon or some elderly person who doesn't know anything. Then you got to choose, should I lowball them or be honest? A lot of profiting off of knowledge of real value or being better at taking photographs. The people who restore stuff are cool. There's added value there. Yeah, restoring stuff's pretty interesting. Follow up. She may have forgot on Monday. It's been 2 days since today's the day to do it. Yeah, I'll give him a call later and I'll see after the stream, or I guess during the earnings call, maybe I'll do it. Earnings call starts in like 10 minutes. And that's probably, I'll throw that up, and then that's pretty much the end of the stream for the most part. How come the earnings call isn't coming up, though? What's going on here? What is happening? Never heard back on 95% of all applications I submitted, but following up can never hurt. I did like an interview and stuff. What's up, Kev? Alright, I think, there we go. Get rid of that. I guess we don't need the price of CrowdStrike up here anymore. $5 billion. Damn, they made $51 billion, or is that 51 million? Thousand? I think that's 51. I think that's 51 billion, but I'm not sure. Maybe 51 million. Yeah, I think it's 51 million actually. Okay. Throw that up. Where's the sound? Guess there's no sound. I don't know what's up with that. You applying for jobs? Not really. I applied for a couple, but I don't really waste my time applying for jobs. I've applied for enough. But if there's like an interesting opportunity I see, I'll do it. Just never works out. I don't. I'm gonna jet. Alright, Moose. Enjoy it, bro. Enjoy it. Appreciate you stopping in, man. Hope you have a good rest of your day. Create your own product. I installed a radio and speaker along with jacks to hook external speakers into our golf cart. AliExpress. Total cost $14. How many campgrounds, RV places, retirement communities have retro golf carts? Tons. That's an interesting idea. Radio and speaker. AliExpress radio and speakers for $14. That's actually really smart. That's actually a really good idea. That's awesome. I like that idea. Huh. AliExpress. Good old AliExpress. Good old AliExpress. I haven't been on this website in a long time. The speaker. AliExpress. Welcome to AliExpress. I actually don't know if I've ever ordered off AliExpress. I think I've only ordered off Alibaba. Or actually, I think I might have ordered off AliExpress one time, but it wasn't under my account, I don't think. That's such a funny idea, man. That's such a funny idea. I love that. I love that idea. Every time I'm out of work, I take demolition jobs, usually easy to find and easy to work your way up a little decent wages. Don't know about in the US though. I haven't really seen like too many like construction job listings. I think you just have to like hit up the construction company and see if they're hiring. I actually haven't seen like jobs like that. I don't think. But like I said, I don't really like sit and apply for jobs. There was a time in my life where I was applying for a lot of jobs and like spending a lot of time on like job boards and stuff like that. But after, applying to like a few hundred jobs, a couple hundred, I don't know how many, it's just not worth my time, honestly. It's just not. It's like it's a job to find a job. It's kind of insane. The perfect campfire. I took cheap tripod car jack, the ones with the pins. I welded angle brackets along the base steady. Welded an angle bracket across the top. Perfect campfire every time. Cost $24 for the 2 jacks. Angle iron comes from a queen bed frame. Could bolt versus weld. I bet it could sell for 99 bucks each on eBay. It's about 10 minutes done. Huh. Something like that. I don't know if it would sell on eBay, though. I don't know. I've always found it very difficult to sell like customized things on eBay. Seems like only like brand name stuff sells on eBay, or like specific parts or something. But that'd be like a good like is it like Pinterest? I think it's Pinterest. Or like Etsy or something like that. Campers want perfect campfire. I built 5 of them now for fellow campers. Really? Dude, that's sick. That's awesome, Unites. I love that. That's really cool. You have a lot of experience, bro. A lot of experience. It's that engineering background though. Engineers think differently, bro. Engineers think so differently compared to like your average person, I feel like. There's just something about it. Every person I've met who's like an engineer, they're just so interesting. The way they like view things and the ideas they come up with. It's just I don't know what it is. I don't know what it is. Console to carry things in the golf cart, like you've a console in your car. Oh, that's pretty smart. I could like vision that. It like has like a little hook or something that you can hook under the seat so it doesn't fall off or something. I don't know. Or maybe it like connects to the back of the basket. I used to sell homemade slingshots, just go for a walk, cut some trees, dry them, sand them, put some elastic on. They sold well. There's a lot of UK redneck types like to hunt with them. That's cool, man. That's cool. I don't think I've ever like built anything like that and sold it. Like I've sold a lot of stuff like on eBay and stuff, but I've never like I don't think I've ever customized something and sold it to someone. Like when I first got my Sur-On, I used to sell brake pads. I still have a ton of the brake pads in my garage, but they don't sell anymore. Those were awesome, bro. I was making like 10-20 bucks profit every sell, and like 2 or 3 would sell every day. Man, I miss those days. Now I can't even sell one. I used to sell like skateboards. I made like a custom logo and stuff, and I actually have one. I think over here. And they used to be in the background of my videos. I'm sure you guys have seen them. These little guys. Yeah, I'm sure you guys have seen these. I used to sell those. Those didn't sell that well, but they were cool. It was a fun little like project. I don't know. I've sold a lot of stuff. I've sold so much stuff. It's hard to remember. Those are like 2 things that kind of come to mind that sold consistently and did pretty well. The skateboards didn't do like that well, but they did sell.
Hello and welcome to Crowdstrike's fiscal second quarter 2027 financial results conference call.
Here's Crowdstrike earnings.
All participants are in a listen-only mode. After the speaker's presentation, we will conduct a question and answer session.
I guess that's the end of the stream, basically. If you guys are here for Crowdstrike earnings, enjoy. All my OGs, all the people who support the stream and the videos, I appreciate you guys. And, yeah.
With me on the call are George Kurtz, Chief Executive Officer and founder of CrowdStrike, and Bert Podbear, Chief Financial Officer. Before we get started, I would like to note that certain statements made during this conference call that are not historical facts including those regarding our future plans, objectives, growth, including projections, and expected performance, including our outlook for the third quarter and fiscal year 2027, and any assumptions for fiscal periods beyond that, are forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. These forward-looking statements represent our outlook only as of the date of this call. While we believe any forward-looking statements we make are reasonable, actual results could differ materially because the statements are based on current expectations and are subject to risks and uncertainties. We do not undertake and expressly disclaim any obligation to update or alter our forward-looking statements, whether as a result of new information, future events, or otherwise. Further information on these and other factors that could affect the company's financial results is included in the filings we make with the SEC from time to time, including the section titled Risk Factors in the company's annual and quarterly reports. Additionally, unless otherwise stated, excluding revenue, all financial measures disclosed on this call will be non-GAAP. A discussion of why we use non-GAAP financial measures and a reconciliation schedule showing GAAP versus non-GAAP results is currently available in our earnings release, which may be found on our investor relations website at ir.crowdstrike.com or on our Form 8-K filed with the SEC today. With that, I will now turn the call over to George.
Thank you, Andy, and thank you for joining CrowdStrike's Q2 FY27 earnings call. When we last spoke, we were just weeks after what we called the Mythos moment, an inflection point in cybersecurity. The world came to understand that cybersecurity is a necessity for AI adoption. New models created a new risk environment with no turning back. Recently, this realization became even clearer with the market's newest adversary, AI agents themselves. We told you this was the future, and this future is now a reality. Our previous guidance foreshadowed this conviction, and CrowdStrike's Q2 was our very best quarter in company history. Inflection has become acceleration. Our Q2 results set a new bar. Here's what we delivered. 1. All-time record net new ARR of $333 million, accelerating to 51% year-over-year growth and beating the high end of our guidance by more than $45 million. 2. Ending ARR growth accelerated for the fourth consecutive quarter, reaching $5.84 billion, up more than 25% year-over-year. 3. Total revenue growth accelerated for the fifth consecutive quarter, reaching $1.47 billion, up 26% year-over-year. 4. Q2 record free cash flow of $377 million, or 26% of revenue, growing 33% year-over-year. 5. All-time record operating income of $372 million, or 25% of revenue, growing 46% year-over-year. 6. All-time record net new ARR from new logos, while both net and gross dollar-based retention improved over the prior quarter. 7. All-time record Falcon Flex quarter with ending ARR from accounts that have adopted the Falcon Flex subscription model, surpassing $2.29 billion, accelerating to 101% year-over-year growth. And 8. FY27 net new ARR guidance increase of 630 basis points. We now expect year-over-year growth of 34% at the midpoint, a 1,150 basis point increase from our initial outlook. The quarter was a sea change for CrowdStrike, and I see these dynamics continuing. We're in an arms race. AI is driving more cyber attacks. AI is driving more cyber spending. AI is driving a clear divide between the cybersecurity companies that solve problems and those that compound problems. CrowdStrike's quarter demonstrates the market trusting us more than ever to secure their adoption of AI with cybersecurity's single platform of choice. The world's adoption of AI is rapidly expanding the attack surface. More models, more agents, more agentic applications, more data, and with that, more identities, more permissions, more policies, more cyber attacks, and more risk. Agent proliferation is becoming mainstream to augment work and personal life. Agents are powerful forces for productivity and good. Agents are also human and machine risk multipliers with access to data, continuous operational capability, and limited judgment. We're seeing agents go rogue, swarming to attack and moving beyond their guardrails to autonomously harm. Agents are proving capable of data theft, permission alteration, and full-on command and control at scale, leading to organizational compromise. The agent of today is both a friend and foe. The currency of protection is increasingly presence and speed. Do you have the right technology deployed that can see, prevent, and stop agentic attacks? Do you have the right technology that can outpace an entirely new real-time adversary? The AI threat environment is shining a clear light on which products work and which don't. We see failing products as open doors for agentic adversaries. At CrowdStrike, we don't just stop these breaches, we and our partners help the world recover from them. In this threat landscape, CrowdStrike stands out. Our market-leading cybersecurity services are in high demand. The flywheel we've created of best-in-class incident response services, lauded by law firms and insurance brokers, translates into best-in-class product outcomes for new customers. Ever since Mythos, we've seen growth in our business, not measured by meetings or calls, but measured by ARR. And we don't see the threat landscape subsiding. Far from it. Demand for AI grows, our TAM, driving the need for CrowdStrike. The AI transformation doesn't just necessitate a technological lift and shift. It's necessitating a fundamentally new go-to-market motion, one based on maximizing time to value, ecosystem impact, and ROI. The Falcon platform removes friction from cybersecurity, and the go-to-market motion we created with Falcon Flex does the same. Flex is the commercial harness to enable customer success in the agentic era. This quarter, we kicked Falcon Flex activity into high gear with our Flex-first go-to-market strategy. Our top 10 deals by deal value were each Flexes, and the results speak for themselves. This quarter, we delivered record Flex deal volume, adding more than 935 Flex accounts. That's more than 10 Flexes every day of the quarter, and more Flexes than the last 3 quarters combined. When Falcon customers convert from standard subscriptions to Flex, we see a greater than 40% average ending ARR uplift. We're not just focused on converting existing customers to Flex, we use Flex from the start with new logo customers. Flex new logo ARR contributed 34% of Q2 net new ARR, a record. We also saw record reflex activity for existing Flex customers, with more than 630 accounts having reflexed at least once, up 6x year over year. On average, a customer's first reflex happens in 8 months from their initial Flex. Lastly, we saw record repeat reflex customers with average ending ARR uplift of 53% from their initial Flex subscription. Falcon Flex wins include a frontier lab that significantly grew with CrowdStrike in an 8-figure ARR deal, using Flex to maintain cost visibility while significantly growing Falcon Cloud Security across its rapidly expanding data center infrastructure. A European automotive manufacturer called upon CrowdStrike to replace a next-gen EDR, a legacy SIEM, and a legacy vulnerability management product. Landing with an 8-figure net new Falcon Flex, CrowdStrike delivered superior outcomes and immediate platform consolidation. Our Falcon Flex go-to-market motion unlocks the complete aperture of the Falcon platform. When looking at our Q2 performance, I'm pleased to see strength across so many different product areas. Increasingly, the epicenter of agentic work, securing the endpoint, is now a top spend priority. CrowdStrike is the leader in endpoint. We're now capitalizing on our ubiquitous endpoint presence to deliver the future of AI security. In Q2, our endpoint business accelerated for the 4th consecutive quarter as customers look to secure their growing AI attack surface. We're seeing dramatic expansion in agentic work on the endpoint, both through fast-growing tools such as Codex and Claude, as well as custom agentic applications. In sampling our customer base, we've seen more than 400% growth in Claude usage and more than 100% growth in custom agent usage on endpoints in recent months. As enterprises look to deploy these new technologies, they're also seeking ways to contain the new risk created, ranging from code exploitation to data leakage to identity compromise. Instead of turning to science projects or point products, the market is trusting CrowdStrike as critical infrastructure to both enable and safeguard their AI future. A large financial services firm worked with two of our GSI partners to replace a next-gen EDR in an 8-figure flex win. Across more than 100 entities and hundreds of thousands of endpoints, CrowdStrike was selected for the best detection coverage, deployment ease, and the lightest impact. Our endpoint success fuels the adoption of AIDR, a product surging past our expectations. AIDR ending ARR nearly tripled versus Q1 as customers embrace our frictionless approach to AI visibility and security. One of the world's largest banks adopted AIDR in an 8-figure flex win. Immediate AI deployments necessitated security, visibility, and control. We were selected for AI usage visibility and data exfiltration prevention. Demand, adoption, and growth like this is rarely seen. I can't wait to unveil our newest AI security innovations at next week's Falcon conference. Moving to our cloud, identity, and next-gen SIEM businesses, the market is rapidly embracing these products to protect fast-expanding attack surfaces. We delivered record Q2 net new ARR from the combination of these businesses. Unpacking these results, our next-gen SIEM business delivered another banner quarter driven by record Q2 net new ARR. Next-gen SIEM ending ARR surpassed $695 million this quarter as both new and existing customers are standardizing on Falcon as the operating system of the SOC. Our native first-party data advantage, coupled with the speed and efficiency of our platform, continue to set us apart. Features like AgentWorks enable security teams to build, deploy, and manage custom AI security agents, setting the foundation for the AI SOC. In an 8-figure Falcon Flex win, a major American power provider replaced a legacy-acquired SIEM, selecting next-gen SIEM over a firewall-first product for technical, speed, and economic superiority. Turning to our identity business, ending ARR grew 34% year over year to more than $585 million, driven by strength across our identity product portfolio. Specifically, Falcon Shield had another strong quarter as enterprises look to secure their third-party agentic applications. Shield ending ARR grew more than 185% year over year in Q2. In addition, our privileged account security offering saw stellar adoption, with ending ARR growing more than 35x year over year. Rounding out our identity portfolio, we're seeing early success with Signal. Large enterprises are rethinking decades of legacy access controls, no longer effective for the agentic era. Instead, they're embracing Signal's real-time, granular access model for both humans and non-human alike. In one customer alone, Signal brokered more than 30 million unique access decisions without friction. A major global financial firm added next-gen identity to their Falcon deployment following a board-mandated AI security audit. Hand in hand with next-gen identity was an immediate deployment of AIDR, where identity protection enabled AI adoption. Moving on to cloud, where ending ARR exceeded $905 million, growing more than 29% year over year. CrowdStrike is the leader in cloud runtime security, which has become an imperative in protecting modern AI workloads. Our customers tell us that point-in-time posture scans are no longer enough to protect against fast-moving threats that now proliferate in seconds. A mega technology conglomerate opted to use Falcon Cloud Security for our runtime superiority in an 8-figure ARR win. CrowdStrike now secures this organization's AI cloud and labs because of our build pipeline integration and compatibility with internal tools resonating with their DevOps teams. Finally, we're seeing the Mythos moment transform the market's need for exposure management, pressuring antiquated vulnerability management products built for a bygone era. The agentic adversary has broken the exploit sound barrier, and you simply cannot patch vulnerabilities fast enough. As the patch window collapsed, our exposure management business accelerated sequentially in Q2. Falcon Exposure Management offers real-time detection and continuous prioritization to successfully contain a new speed and scale of vulnerability risk. A representative exposure management win included a global religious organization that replaced a legacy vulnerability management product as part of their AI transformation initiatives. In this 7-figure flex, the account also immediately deployed AIDR to bring visibility and control to its AI usage, showcasing CrowdStrike's position to protect against AI threats and govern AI adoption. Our partner ecosystem is mobilized around Falcon and its role in securing AI. Project QuiltWorks has united more than 25 of our partners, from GSIs to hyperscalers, resellers, to ISVs, and even distributors and MSPs. To date, our QuiltWorks partners are collaborating with us on nearly $400 million of total contract value pipeline. We've seen exceptional engagement from GSI partners, resulting in our GSI business growing nearly 50% year over year, largely focused on next-gen SIEM transformations and vulnerability management needs. Across our MSSP business, we're seeing significant traction in the SMB space with key partners such as Crwd. 3 quarters ago, Crwd took a strategic step to migrate all of its customers off a competing next-gen endpoint technology. A majority of customers already successfully migrated to Falcon across 450,000 endpoints. Tracking ahead of plan, Crwd took a major next step with a multi-year Flex subscription, growing their spend with CrowdStrike by more than 3 times. This Flex addresses platform consolidation and SIEM transformation across Crwd's existing Falcon install base and incoming new customers. In another Q2 win, Accenture standardized on CrowdStrike for its new SMB-focused Accenture Edge business launched in June. Lastly, Q2 showcased the power of our one-of-a-kind cloud marketplace go-to-market motion. Across AWS, Google, and Microsoft, each of our hyperscaler marketplace partners, we saw a record Q2 as customers used their hyperscaler of choice for security investments. In Q2 alone, we transacted more than $600 million in deal value through cloud marketplaces, representing more than 30% year-over-year growth. We quickly saw traction with our Microsoft Marketplace presence, opening a new addressable market. Immediate Microsoft Marketplace wins included a new logo Australian healthcare provider started using CrowdStrike for SOC transformation in a 7-figure flex. An American manufacturing firm previously used our services and has now expanded to the Falcon platform through a 7-figure flex on Microsoft Marketplace. In closing, Q2 was an incredible quarter where the Mythos moment turned into acceleration. Acceleration in net new ARR, acceleration in ending ARR, acceleration in Falcon Flex, acceleration in our ecosystem, acceleration in innovation. We're seeing endpoint as the epicenter for AI adoption. We're seeing AIDR define a new cybersecurity category. We're seeing next-gen SIEM as the operating system of cybersecurity, Falcon Identity becoming the security front door for human and non-human users, and exposure management as mission critical for prioritizing AI risk. Taken together, the Falcon platform is cybersecurity's infrastructure layer for AI adoption. AI adoption is accelerating from frontier labs and open weight models alike, and we're still in the early innings of the AI revolution. When I look at our business, here's what this acceleration means. Last quarter, we raised our forward net new ARR growth guidance by 520 basis points. And this quarter, we're raising our FY27 year-over-year net new ARR growth outlook by an additional 630 basis points, even more than last quarter. That's a raise to our net new ARR guidance of more than $100 million since the start of the year. Delivery of a quarter like this and this outlook is fueled by the demand environment in our technology, team, ecosystem, and customers. The innovation engine is in overdrive. As I shared last quarter, Dr. Bartley Richardson, previously at NVIDIA, has joined us as our Chief AI Autonomous System Officer as part of our long-planned and mutually agreed-upon CTO leadership transition. I can't wait to share the vision and innovation that we are bringing to the world's adoption of AI at Falcon in Las Vegas next week. The conference sold out in early August, and it's our largest pipeline generation event of the year. We'll have record customer and partner attendance. I also encourage everyone to tune into our investor briefing on Wednesday, September 2nd. Our role in securing enterprises, governments, and economies is vital to AI adoption and mission critical in an AI-first world. I'll now turn the call over to Burt Podbere, CrowdStrike's CFO.
Thank you, George, and good afternoon, everyone. As a quick reminder, unless otherwise noted, all numbers except revenue mentioned during my remarks today are non-GAAP. Additionally, all earnings per share and share amounts presented today and in our accompanying investor materials have been adjusted to reflect our recent 4-for-1 stock split for all periods presented. We delivered a record second quarter, exceeding expectations across all guided metrics. We achieved an all-time record $333 million of net new ARR, well ahead of our guidance and accelerating to 51% growth year over year. Ending ARR reached $5.84 billion, up more than 25% over the prior year as growth accelerated for the fourth consecutive quarter. As George discussed, the post-Mythos demand environment continued to strengthen in Q2. The customer urgency we began to see in Q1 translated into increased cybersecurity investment, accelerated modernization, and stronger demand for the Falcon platform. Our exceptional Q2 performance was broad-based across customer sizes and geographies. Net new ARR contribution from new logos was an all-time record, and both our dollar-based net and gross retention rates improved sequentially. Platform adoption also continued to deepen, with 51%, 35%, and 26% of subscription customers adopting 6, 7, and 8 or more modules respectively. Falcon Flex continues to be a key driver of our platform consolidation, with this quarter showcasing the power of our Flex-first strategy. In Q2, customers converting from standard subscriptions to Flex delivered an average ending ARR uplift of more than 40%. From that new baseline, customers completing their first Reflex this quarter generated an additional average ending ARR expansion of 25%. Looking at the cumulative uplift of customers who have reflexed at least twice, in Q2, these customers had average ending ARR 53% higher than their initial Flex starting point, increasing for the second consecutive quarter. Taken together, these results underscore exceptional execution and the power of our platform strategy, with AI-driven demand accelerating platform consolidation and helping deliver the strongest quarter in CrowdStrike's history. We also exited the quarter with a record Q3 pipeline, further reinforcing our confidence in the demand environment ahead. Moving to the P&L, total revenue exceeded our guidance range and grew 26% over Q2 of last year to reach $1.47 billion, with year-over-year growth accelerating sequentially for the fifth consecutive quarter. Subscription revenue grew 27% over Q2 of last year to reach $1.40 billion, and professional services revenue was an all-time record $71 million, as AI creates incremental demand for our AI readiness and incident response services further increasing software cross-sell opportunities. The geographic mix of second quarter revenue consisted of approximately 65% from the US and 35% from international geographies. Broad-based strength across our major regions drove international year-over-year revenue growth acceleration for the fifth consecutive quarter. Total Q2 non-GAAP gross margin was 79%, up approximately 110 basis points over the prior year. Non-GAAP subscription gross margin was 81%, up approximately 90 basis points over the prior year, driven by continued cloud optimization efforts as we remain focused on achieving our FY29 target model of 82 to 85% non-GAAP subscription gross margin. Second quarter non-GAAP operating income was a record $372 million, exceeding our guidance, and non-GAAP operating margin was 25%, up 350 basis points over the prior year. The outperformance was driven by strong top-line execution, continued gross margin expansion, and increased operating efficiency. Our internal investments in automation and AI continue to yield greater operational efficiencies and productivity gains across our business. The combination of accelerating revenue growth and substantial year-over-year operating margin expansion demonstrates our strong operating leverage as we invest in the significant opportunities ahead, positioning us to deliver durable, profitable growth. In Q2, we delivered $5 million of GAAP net income attributable to CrowdStrike, marking the third consecutive quarter of positive GAAP earnings. Non-GAAP net income attributable to CrowdStrike was a record $323 million, or 31 cents per diluted share, exceeding our guidance and up 34% compared to the prior year on a split-adjusted basis. Moving to cash, our cash and cash equivalents grew to $5.01 billion. We generated Q2 record cash flow from operations of $530 million and Q2 record free cash flow of $377 million, or 26% of revenue, exceeding our free cash flow margin expectation of 24.5%. Moving to our outlook and modeling notes. Consistent with our guidance philosophy, our outlook reflects the strength we see in the business while maintaining a prudent approach. Our record second quarter performance, record Q3 pipeline, and broad-based demand across customer segments and the Falcon platform give us increased confidence in the strength of the demand environment and our long-term growth opportunity. As a result, we are once again raising our fiscal 2027 net new ARR outlook. At the midpoint, we now expect $1.355 billion of net new ARR for the full year, an increase of approximately $116 million from our initial FY27 outlook. This equates to expected year-over-year net new ARR growth of approximately 34%, compared to 22.5% in our initial FY27 outlook, representing an increase of 1,150 basis points. The magnitude of this increase reflects more than our Q2 outperformance. As AI expands the attack surface and increases the urgency around cybersecurity, we believe it is driving a broader security modernization cycle that creates durable demand across the Falcon platform. Combined with continued platform consolidation and strong Falcon Flex momentum, these demand signals reinforce our confidence in the full-year opportunity ahead. Before I walk through our detailed guidance, let me highlight two additional items to keep in mind. First, the acquisition of XM Cyber's technology assets is expected to close in the second half of FY27 and will not bring any ARR or revenue to CrowdStrike, nor are we including any ARR or revenue from this transaction into the FY27 guidance. And second, at the midpoint of our guidance, we expect free cash flow margin of 27.5% in Q3 and continue to expect at least 30% for the full fiscal year on our increased revenue guidance. With that, for the third quarter of FY27, we expect annual recurring revenue to be in the range of $6.184 to $6.188 billion, up 26% year over year. This translates to net new ARR of $343 to $347 million, up 29 to 31% year over year. Total revenue to be in the range of $1.523 to $1.529 billion, up 23 to 24% year over year. Non-GAAP income from operations to be in the range of $373 to $376 million, and non-GAAP net income attributable to CrowdStrike to be in the range of $325 to $328 million. Diluted non-GAAP net income per share attributable to CrowdStrike to be approximately 31 cents, assuming a 21% tax rate and approximately 1.048 billion weighted average diluted shares. For the full fiscal year 2027, we expect annual recurring revenue to be in the range of $6.603 to $6.612 billion, up 26% year over year. This translates to net new ARR of $1.350 to $1.359 billion, up 34% year over year. Total revenue to be in the range of $5.991 to $6.011 billion, up 25% over the prior fiscal year. Non-GAAP income from operations is expected to be between $1.497 and $1.508 billion, and non-GAAP net income attributable to CrowdStrike to be between $1.303 and $1.312 billion. Assuming a 21% tax rate and approximately 1.044 billion weighted average diluted shares, we expect non-GAAP net income per share attributable to CrowdStrike to be in the range of $1.25 to $1.26. George and I will now take your questions.
Thank you. If you would like to ask a question, please click on the raise hand button, which can be found on the bar at the bottom of the Zoom window. You may remove yourself from the queue at any time by lowering your hand. When it is your turn, you will hear your name called and receive a message on your screen notifying you that you may unmute yourself. In the interest of time, participants will be limited to one question. Our first question comes from Saket Kalia with Barclays. Please unmute your audio and ask your question.
Okay, great. Can you hear me okay?
Yes, go ahead. Yep.
Okay, excellent. Well, hey guys, thanks for taking my question here, and great to see the acceleration continue. George, maybe for you, the Mythos moment, happened in the spring, and now we've gotten a few months of activity behind us. Could you maybe talk about what transpired after that? And as you look back, what were some of the key drivers of this upside here in Q2?
Thanks, Zach. So as we mentioned in the spring, the Mythos moment was building. And as we told you, it was going to be a growth driver and a tailwind for us. And you saw that show up in our results. When we think about AI agents going rogue, when you think about the need for protecting and AI and understanding where shadow AI is, it all points to the technologies that we're building and delivering here, like AIDR. Which was just had a phenomenal quarter. No surprise. Obviously, cloud, identity, next-gen SIEM, endpoint was accelerating, and exposure management, which is a big element now, given the fact that companies can't keep up with the patching. So when you put all of that together, it comes to what we said. The Mythos moment was a point of acceleration, and we see those tailwinds continuing.
Thanks, Saket. Operator, next question, please.
Your next question will come from Brian Essex with JP Morgan. Please unmute your audio and ask your question.
Hi, good afternoon. Thanks for taking the question, and great to see the nice magnitude of net new ARR upside this quarter. Maybe George, for you, just to piggyback on Saket's question there, would love to get your view on the durability of strength that you're seeing on the back of the Mythos moment, so to speak. I mean, how much of the momentum goes beyond next quarter, perhaps beyond the end of the year? And given what you have in your pipeline, how much visibility do you have into the strength, maybe just into next year and beyond? Thank you.
Sure. I think when you look at the durability, it's, in my opinion, it is absolutely there. It's one of the reasons why we raised FY27 outlook again. And what we're hearing from customers is they want to deploy more AI, but they're being held back because of security, compliance, privacy, data protection type issues. So every customer that we talk to is concerned about the agentic threats. We've seen agents go wild. We've seen them break out of the frontier labs.
And this is a sustainable tailwind. If we believe that AI is in its early days and is only going to get better and more powerful, combined with the autonomous nature of these attacks, it's absolutely something that every company is going to need. And as I said in a prior earnings call, I think the AI DR business can be bigger than the EDR business, just given the pure number of agents which each person will have, which is estimated to be about 90. So for me, it's sustained tailwinds, and I think we're only going to see more stories around agents gone wild, and we're going to be there to protect our customers.
Yeah, and I think, Brian, the numbers back it up. Look, you start with the record Q3 pipeline. So that prompted us, to raise our full year guidance by an additional 630 basis points. That means we moved our FY27 net new ARR growth rate from 27.7 at the end of last quarter to 34% this quarter. When compared to our initial guide for the year, we raised the growth rate 1,150 basis points, or $116 million in just 2 quarters. That talks to the durability of the things that George talked about.
Thanks, Brian. Operator, next question, please.
Your next question will come from Gabriela Borges with Goldman Sachs. Please unmute your audio and ask your question.
Hey, good afternoon. Thank you. George and Bert, I wanted to ask you a little bit of a product question. You gave the case studies earlier on customer journeys and some of the flagship wins in the quarter. What I want to better understand is if you have a customer, let's say it's a large financial organization, and they go from having agents being sandboxed and isolated, regardless of how effective those sandboxes can be, to actually wanting the agents to have real customer data, real enterprise data. Walk us through the before and after. How do you advise those clients on what products they need to buy from CrowdStrike? Clearly, identity is a part of it, to be able to say agents isolated to agents in production. Thank you.
Sure. Well, I think to make the agents productive, they're going to have access to data. And again, when you look at what we're delivering for customers, it's looking across the entire spectrum of threats, right? You have to have an identity control plane, which we have for non-human identities. You have to have data protection, which we have. You have to understand at runtime what the agents are actually doing, whether that's in a sandbox or if those agents are running essentially on your computer or your laptop. You have to understand the exposures that you have. You have to be able to keep track of where those agents are calling out to. We can do all of that. So if it's in a sandbox, we can run in a sandbox. If it's out of a sandbox, which many of our customers are, just kind of consuming AI on their desktops using the various Frontier Lab, harnesses and the like. And we cover all of those, including if you're creating agents in a cloud environment. So from my perspective, the agents, first of all, you need to know where AI is being created. You need to know where it's being consumed. And you have to put the right guardrails around identity, data, execution, and network connectivity. And we're delivering that for our customers. Thanks, Gabriella. Operator, next.
Your next question will come from Matt Hedberg with RBC. Please unmute your audio and ask your question.
Hey guys, thanks for taking my questions. I'll offer my congrats as well. I wanted to piggyback sort of on this train of thought, and George, you talked about it in your prepared remarks, but I think we all sitting back there and we're seeing these agents going rogue, and just how quickly this landscape is changing. So I guess from your perspective, I just wanted to kind of double click on like how you see the threat landscape today, and when we think about how quickly this is changing. The relationship with the Frontier Labs is obviously great, but talk to us about why you're uniquely positioned, even if these Frontier Labs start to release some of their own security solutions in the future.
Sure. Well, I think it's important that when you look at AI and to make AI protection more effective, you have to have very deep data expertise. And this has been something that's been basically built into the platform from day one. Over the last 15 years, we have some of the richest threat data, richest attack data, richest data around actually how to mitigate these threats in the industry. So when you look at the models that we've built, we've trained on those specifically, and that gives us a unique perspective. Customers, of course, want choice. They want to work with Frontier models. They want to work with our technology and our platform. Fantastic.
But having the right data, having it trained in a specific fashion and labeled appropriately, I think is unique. And we have data that just isn't available outside of the CrowdStrike walls. That's very important. The other piece is, and I mentioned this some time ago, we are net data creators. We're constantly creating new data that's coming out of our endpoints. We're constantly using that data to update our algorithms as the threat environment changes. And again, I think this is very important to our customers. They want security companies they can trust. They want data sovereignty from a technology perspective. And they want to get actual results based upon the information in their own environment. And we're delivering that today.
Thanks, Matt. Operator, next question.
Your next question will come from Fatima Boolani with Citi. Please unmute your audio and ask your question.
Good afternoon. Thank you so much for taking my question. I wanted to double back on some of the earlier questions around portfolio pervasiveness. So specifically just around the acceleration that you continue to see in Falcon Flex, both from a standard conversion and reflex. George, I was hoping if you could help us maybe parse out more granularly where you are seeing the most incremental or outsized traction on a SKU or disciplinary basis as organizations move to production grade AI adoption. And I guess in other words, it's sort of what parts of the portfolio have proven to be most potent in giving organizations the assurances and confidence they need that they are in a secure situation with their AI adoption.
Sure. I'll take that, Fatima. So first, let's just talk about Flex. So Flex, it was an all-time record Flex quarter with year-over-year growth accelerating to 101% year-over-year, surpassing 2.29 billion. And a lot of that is coming from some of the different technologies that we've been talking about quarter after quarter. When you think about cloud, next-gen SIEM, next-gen identity, ending ARR was 2.1 billion, up 39% year-over-year. And if you go down the list of how we've done in each one of those particular elements, they're all really impressive, right? You think about cloud, over $905 million in ending ARR, up 29%. You've got next-gen identity, which is a big piece of the AI story. That's up 33% year-over-year. And then you've got obviously next-gen SIEM, just a home run for us. That's coming up on 600, almost 700 million, and that's up 60% year-over-year. So all three of those can be an IPO by themselves. So you're seeing kind of adoption through our Flex licensing, really showcase itself in those three products. And then George mentioned a whole bunch of other ones. We talked about exposure management having a great quarter. You talked about AI and DR having a fantastic quarter. So I think the point is that Flex is lending itself to be able to buy multiple of our products at the same time. And that's what's leading to bigger, longer deals for us. And it's better for the customer. At the end of the day, it's the platform sale. That's what matters. Customers looking to consolidate on it. They want better outcomes at a cheaper cost.
Thanks, Fatima. Operator, next question.
Our next question will come from Meta Marshall with Morgan Stanley. Please unmute your audio and ask your question.
Great, thanks. I wanted to maybe follow up on some of that next-gen SIEM strength. If we were having this conversation a year ago, there was a lot of customers can start moving their EDR data over and then kind of gradually over time expand those implementations. I just wanted to get a sense, as you guys are seeing continued really strong growth, is that kind of land happening differently? Like, are people taking more of a chance up front and moving more to you guys initially? And then just, are we seeing kind of more data or logs being put into the SIEM to give better signals as they try to kind of detect more advanced attacks? Thanks.
Yeah, well, when you look at next-gen SIEM, the great news is it's every customer's next-gen SIEM enabled. Like, the data is just in the platform, so it's just a matter of signing up and paying for the license entitlement, and you're up and running with the CrowdStrike, what we call first-party data, the data that we actually generate. So that's has made it incredibly easy and friction-free for many customers. They routinely say it's the easiest SIEM to get up and running. It's the quickest return in terms of time to value of what they're putting in and the results they're getting out. and then it's very easy to connect to other data sources. We've seen the other data sources rapidly expand. If we think about AI agents, SaaS and SaaS, cloud agents, if you will, these are all, and identity, these are all areas that customers have to instrument, because we see these cross-domain attacks that go from internal systems to the cloud, or cloud to internal systems, and everything in between. So we've seen just tremendous results there. It's a fantastic product, and it's very disruptive from a price point because of how we charge for the first-party data that we create. So, it is a story of better, faster, and more value for the money. And you can see the results, they speak for themselves.
Thanks, Mia. Operator, next question, please.
Our next question will come from Adam Tyndall with Raymond James. Please unmute your audio and ask your question.
Okay, thanks. Good afternoon, and congrats on a great quarter. George, I wanted to ask on AIDR versus the core EDR platform, kind of a two-parter. I ask because investors are struggling with the definition and a view that there might be more gray area between AIDR and your core platform. So I guess the first part of the question would be, is there kind of a simple way to think about AIDR, where is this incremental, where customers are buying this in addition to EDR, or is this being used more as a substitute for EDR or any other products? And the second part would be, you've kind of alluded to some metrics around this that have been helpful, but I wonder if you might just take a second to put in context the ramp of AIDR versus other products at this stage as we try to think about the potential ultimate size of that platform. Thank you.
Yeah, so on the first point, it is separate and incremental. It's another module, and it's priced separately, which is, again, where we're seeing a lot of the growth. So that is, certainly a good fact to make sure that we clear up if there was any confusion about it. When we think about the beauty of the architecture and the platform, it's still using the same agent. And if you want to enable AIDR, again, that's a license entitlement. It's part of our friction-free deployment. Again, why is Falcon Flex so successful? Why have we been successful? Immediate time to value. You don't have to roll out yet another agent. So that's very important. And when we talk about sort of like the ramp of this, it's been incredible over the last couple of quarters, and we've seen almost the results sort of parallel some of the Frontier Labs growth. As they continue to add more agents and capabilities, you have customers that are deploying more AI. They actually want to deploy AI faster, and they need to scale incredibly fast. So when you combine what we're building with, again, it's on the same platform, that's the beauty, but we're able to monetize it separately. We think that's a home run, and we're showing the value to customers, and they're willing to pay for it because it's very unique in the environment, and they don't want to deploy yet another agent, right? They're getting it all with CrowdStrike, and that's what they're looking for.
All right, thanks, Adam. Operator, next question.
Our next question will come from Roger Boyd with UBS. Please unmute your audio and ask your question.
Great, thanks for the question. For George or maybe for Bert, given the traction you're seeing around AI security, and you noted the acceleration in AIDR, overall AI usage across your install base and inflecting, appreciate your updated views on how you're evolving the pricing model, and namely, are customers asking for token-based pricing in cybersecurity? And if so, how is that being incorporated into Flex contracts? Thanks.
Yeah, so we actually have token-based pricing as part of AIDR. So we already have that today. And what's important from a customer perspective is they do want some certainty on what they're paying. So we provide a certain number of tokens across an environment, and we scale that to how big the customer is. And then if they exceed that token usage, they can buy extra token packs. And again, the beauty is it's all consumable via the Falcon Flex licensing. So it's a model I think that served us well, where it's not runaway cost for customers. They can define it, they can budget for it, but certainly as they scale up their AI, if they exceed their budgeted allowance, they certainly can up-level the tokens, and it's friction-free to do that with Falcon Flex.
Okay, thanks for the question. Operator, next question, please.
Our next question comes from Rob Owens with Piper Sandler. Please unmute your audio and ask your question.
Great, thank you, and good afternoon. George, I guess back to the start and thinking about your history with Foundstone a little bit, and twice on this call you did mention exposure management. So love to understand the evolution of that market, where you're seeing displacement, because I think you mentioned a large scale transaction there, and effectively what the older solutions aren't providing at this point. I know that you guys adopted a network scanning capability a year ago, but with AI, I'd assume it's well beyond that at this point. So just would love for you to drill down on that opportunity and why CrowdStrike is winning. Thanks.
Sure. So when we think about where we are with exposure management, I think it's a rebirth, and certainly we're in pole position in that area. So what I mean by that is, given the fact that there's an exponential increase in vulnerabilities that are found via frontier AI, and patches that can be created via frontier AI, that's great. The problem is you've hit the sound barrier of actually rolling out a patch. And what that means is that companies are looking for their ability to prioritize where these exposures are, because they're not going to be able to fix everything all at once within the window of what autonomous agents can actually exploit. So that's really the driver in an area where customers are looking at it saying, hey, I've got to think about this differently. I can't be doing the same old things that we've been doing. I can't keep using the same old legacy exposure management or vulnerability management technology. So they want a view of their assets. They want a view of where their protection is, Falcon. They want a view of what's exposed, right? What patches need to be applied but haven't. And they want to understand the attack paths. And we are delivering that in an autonomous fashion within the Falcon platform. And that's a big reason why we're displacing a lot of the legacy vendors in the market today.
Okay, thanks, Rob. Operator, next question.
Our next question comes from Mike Cikos with Needham. Please unmute your audio and ask your question.
Thank you for taking the questions, and congratulations on another significant lift here to the net new ARR guide following the strong 2Q execution. George, maybe for you, we've been doing a significant amount of work with CISOs, and the common refrain we're hearing comes back to AI governance, both in terms of security as well as the pull through on the economic need to control these AI costs. My question really ties to, can you just put a finer point on discussing how customers are turning to Crowd in terms of serving as that strategic partner for implementing and enforcing AI governance guardrails? I think that'd be super helpful. Thank you.
Sure. Well, in the product today, we have the ability to set policy and enforce those guardrails, which is incredibly useful, needed, and incredibly difficult. As you might imagine, in some organizations that are dealing with, they make chemicals as an example. Well, that may be something that, is not an approved sort of topic, if you will, in other companies, but in some companies, that's what they make, right? So you have to be able to have the right models to understand what's happening in the environment. You have to be able to set the policies in a way that actually work and minimize false positives. And then you have to give these customers, very good results very quickly so they can roll this thing out without a lot of friction. And we're doing that today. The other piece, and you touched on it, which is very important, is we actually have the ability to count tokens and track cost. And this is very important as you expand outside of the boundaries of just pure security. When we think about IT infrastructure, we think about the CIO, having the ability to help them manage cost is a big part of our selling point as well. So you get the guardrails that you're looking for, get the protection you need, and also you have visibility into where your AI agents are and what people are actually spending on these results. And it's incredible. I mean, we've heard EA spending $10,000 just on tokens because of the way they were using the models. And dramatically, once you understand and have visibility around that, you can dramatically cut those costs down. So it's really a 1-2 punch of protection and cost management.
Thanks, Mike. Operator, next question.
Our next question comes from Patrick Colville with Scotiabank. Please unmute your audio and ask your question.
Thank you for having me on. I guess this one for both George and Burt, please. When you talked about the Frontier Lab 8-figure deal with this customer protecting their rapidly expanding data center infrastructure. Any more details you can share on this specific 8-figure deal? And then to zoom out the aperture a little bit, could you just talk to this emerging customer category of helping to protect the frontier labs? Thank you.
Sure. I think you've got the digital natives that are out there, AI native companies. You've got the frontier labs, as you might imagine. All of the companies that are involved in creating AI need to protect AI, and they're turning to CrowdStrike because we've got the right technologies across the entire stack. And again, like if you look at what we've done with NVIDIA and how we have integrated into their platforms, it's a complete ecosystem from the chips all the way up to the applications and AI inference. So we think we're in a great position to be able to help these rapidly growing and expanding companies, because they're going to need visibility, they're going to need protection, they're going to need control, they're going to need compliance as they continue to scale. And we think the sky's the limit with the frontier model creators and anyone involved in the AI ecosystem. And we're there for them, and we think we have a very unique and differentiated technology in those areas.
All right, thanks, Patrick. Operator, next question.
Our next question comes from Joseph Gallo with Jefferies. Please unmute your audio and ask your question.
Hey guys, thanks for the question. There's a lot of excitement and big numbers with the emerging products on the call, but I just wanted to focus on endpoint, which accelerated for the fourth straight quarter. Can you just unpack that a little bit more? Is that new logos? Is that selling more managed services and premium SKUs? And just how much runway is left there, just given it's perceived as a more mature market?
Sure. Well, I think when you look at companies' desire to protect AI, again, a lot of the AI is being consumed on the endpoint, right? It might be created in the cloud, but it's being consumed on the endpoint. You can think about your own organizations and perhaps how you even use AI. So that has driven the need for companies like CrowdStrike to be able to actually protect those instances. If we think about the market, about half the market is still using legacy AV. Right, so legacy AV and legacy providers are not really going to have the capabilities to identify rogue AI agents, shadow AI, and be able to protect against it. It's very unique and differentiated, but it fits within the platform that we built from the beginning. So that's one area where, again, if you want to protect these endpoints, you're going to have something like CrowdStrike, and that includes net new wins from a lot of the legacy providers that are out there, certainly in addition to cross-selling into our customer base.
Thanks, Joe. Operator, next question, please.
Our next question comes from Todd Weller with Stephens. Please unmute your audio and ask your question.
Yeah, good afternoon. Congrats and thanks for taking the question. George, question on QuiltWorks. Can you talk about how impactful it was in the quarter, and then trying to better understand the monetization angles there? Should we initially think about that as like a partner-led motion where they're leveraging your platform and frontier AI model capabilities to do assessments, and then that drives kind of follow-on platform pull-through? Thank you.
Yeah, that's exactly right. When we think about the Mythos moment, there's many of our partners, and again, we're a very partner-first organization that want to be able to service their customers. They've got great relationships, but we need to be able to arm them with frontier caliber capabilities to be able to understand where these vulnerabilities are, what threats are out there, and what they can do. So essentially, they're leveraging our platform in a partner-led motion, and finding these vulnerabilities, understanding exposure, and then obviously working on remediation with some of the largest enterprises in the world. And of course, that leads to platform pull-through. So I think from our perspective, it's been a home run in QuiltWorks. We have many companies that want to still yet get into it. We're working through all of those, and we'll continue to expand the partners as well as its capabilities within the platform for them to leverage.
Thank you. This concludes today's question and answer session. I would now like to turn the call back over to George Kurtz for closing remarks.
Thank you for your time today. We appreciate your continued support and look forward to seeing you at Falcon 2026 and other upcoming events. Thank you.
Thank you. And thank you, chat. Thank you guys for being here today. I'll see you guys in the next earnings stream, or if anything happens with GameStop, I'll come on stream and talk about it. But other than that, have a good rest of your day/night. And yeah, God bless you. Peace!